Krishna there with the ground report. A lot of people there, but not the kind of full house that probably Anna supporters were looking forward to. So is the Anna magic waning off is a big question that one will need to debate going forward. Let's get you now a street view at lunch. Enough to talk about as far as the market sentiment is concerned. Rajnish Kumar, Executive Vice President at Fullerton Securities and Wealth Advisors, joins us with his view on the market. Rajnish, afternoon. Thanks for chatting with us. The last time we had you on the show, you were pretty bearish, and you have been for a while now. I guess nothing has happened in the last 15 odd days for you to change your stance. Would you continue to be bearish for the next 3 to 4 months?
Well, some of the things which were looking pretty negative when I came in last time around seem to have changed to some extent. And I would say, the things which have changed, one is inflation numbers. Inflation certainly now looks much more under control, and inflation probably going forward will be significantly under control. That could give us that good news that we've been looking for in terms of rate cut by RBI, and that looks like a distinct possibility in the next few months time, and that could give a fillip to the market as and when it happens. Second, good silver lining on the horizon could be the news emanating from US, though US of course has quite often promised a lot and then has only deceived us in terms of not sustaining it. But currently, at least from the data that's coming out, which is expected today, looks like that US is probably doing much better than what was thought in terms of its economic performance. So if that is sustained, then we could see some bit of good news all around globally in the equity market and for us as well. So these two things could make things look a little better as we get into the new year going forward.
Right. Rajnish, afternoon. Good to have you with us. Talking about how the macros globally as well as locally are playing out, and given the kind of data that we've got coming in from US, the fact that Europe, a lot of countries will be going to poll as well. How are all these factors, how are you factoring that into the model as far as India specifically is concerned? Specifically for FY13 end, any sort of targets that you've put out for the Sensex and the Nifty?
See, Europe is still very uncertain because, as you rightly said, with the elections due in Finland and a lot of resentment in what looks like the northern European economies against what has been planned for a bailout of southern economies. There seems to be a lot of uncertainty there in Europe, and that could lead us into a fairly volatile period, in the next quarter. So hence, I expect next quarter, especially from point of view of European news, to be highly volatile, and we could see some serious impact, and I'm talking about downward impact in the market because of what happens in Europe. But what is quite likely is that we may see a lot of political consensus building up in Europe, because we have seen already that happening to a large extent, where Europeans are probably realizing that there will be some bit of pain for everyone, but they have no choice but to stick together. And if that message comes out clearly, and I hope it does, then we may see, while there would be some bit of uncertainty, things could still be fairly manageable. And if my hope is that is how Europe will probably play out, and then a better news from US and some bit of good news, domestic good news, could actually see the markets move up from these levels. By the time we, by the time we reach March end.
Right. Do you also believe that the RBI could potentially advance its interest rate cutting cycle? Do you think we could look at some kind of a move from the RBI as early as January?
Well, I'm not very sure right now whether RBI would go for a rate cut right now. But it's very likely that it will at least give a guidance saying that they will probably look at rate cuts, and I won't be surprised if it actually happens, and that will be a positive surprise for the market, I would think, and that could probably push the market up a notch.
Right, Rajnish, we've got the markets just about clawing back and trying to go back into that green territory. But specifically, we've had the capital goods pack, which has lost out a phenomenal bit. Almost half of the capitalization has been lost out in this year alone. But today we've got an L&T as well as a BHEL which are holding out. Do you think that this is possibly a good time to enter into a long position into these names for someone who's looking at a 12 to 14 months time horizon, and all the negatives possibly have already been factored in there?
Yeah, that's an interesting point. When you look at a company like L&T and when you look at the long-term prospects, it definitely looks very good. Now, are we likely to make some great returns in the short term from L&T? Probably no. But if you are a long-term investor, by all means, I would think we should buy something like an L&T right now, because look at the price, and things may not change in a few months' time. But if you buy at these levels and hold it for a year or so, or a little longer than that, I'm sure it will give a good return. That's what my bet would be with a company like L&T. And I would think, if you look around, there are a lot of sectors which may have got beaten down, but there are good opportunities to buy. I mean, for example, power has got battered completely, but does it mean that, we would not touch any power company? I don't think so. For example, we've just recommended a buy on CSE because we think at the current valuation it's a great buy. So I think in core sector there are good opportunities right now, but one needs to, of course, look at the fundamentals of the company and then decide.
Rajnish, a quick call on the FMCG pack, the defensives there. How would you view FMCG in 2012, given the fact that they're the one pocket that's done well relatively in 2011? Going into 2012, what would be a call on FMCG?
FMCG, if you look at the rural demand, given the good monsoon that we've had so far this year, especially, I would think that rural demand would be pretty robust, and overall FMCG companies would do well. But valuations look a little challenging. I would think that we'll probably not see much upside in FMCG companies, but there could be one or two there which I may be missing out right now, which may have a potential. But right now our view is that while FMCG companies will in general do well, from an investor point of view, we may not be very enthused about investing in FMCG companies right now.
All right, Rajnish, we'll leave it at that. Good chatting with you as always on Street View at lunch right here on ET Now.
But we'll take a very quick break on the show, come back and get you the latest from the world of commodities with our commodities editor Manisha Gupta, as well as trading strategies from Viral Shah of Geojit's Comtrade. So don't go anywhere.